Hey everybody, welcome to Sniper Gains. On this channel, we'll provide you with the best tips and tools that will help you improve your option trading skills. So if you want to improve your skills, make sure to subscribe to the channel. Now, I'm going to show you a simple break and retest strategy that I use to turn my Meta put contract into a profitable $120 gain. So here it is. Pretty much on Friday, September the 15th, I purchased the contract for $470 and I sold it for $590. These are put contracts. So I wanted to show you the steps and strategies that I use to make this gain, and just to show you that this is real, this is not fake, this is a real account. I'm going to refresh again, and then we're going to scroll down and show you 470, 590. You've seen the proof. Let's dive into the charts. Okay, so in this chart, we're going to start off with the most obvious thing you're seeing. You're going to be seeing random rectangles throughout the chart. Now, it's random if you've never traded before, but what these are support and resistance lines. Pretty much the way they work is like this. If you zoom into this area, these are the candlesticks when they reach to a certain point that will either be pushed down or be pushed up. So for example, when the price is going to this area, you'll notice that it formed pretty much what is considered a double top. This shows that there's a lot of selling pressure that forces the price to go down. Now, another example is right here. This is called a demand zone. So whenever the stock goes up, it bounces up whenever it reaches this area, such as here, such as here. So that's an example of support and resistance lines. Now, one of the things I learned from one YouTuber called Wise Trade is to make sure that you first draw your support and resistance lines on bigger time frames such as the daily, weekly, and monthly. The reason why is any kind of price action that is done on a higher time frame tends to hold more weight. This is important because when a stock goes to what would be considered a supply zone, when you see a rejection at that area, there's a more of a greater chance that that is a real deal that would push the price down instead of you being faked out. That's the first step that I usually take when I am about to perform any kind of strategy. So with that being said, we're going to now focus on the meta play. If I zoom out, as you can see, this play has an overall bullish bias because it's forming higher highs and higher lows. We kind of keep zooming in, you'll see higher high, higher low, higher high, higher low, higher high, higher low. You're kind of getting the process, the way it works. So here I decided to plot a trend line. Notice that I like to kind of color code both my support and resistance lines and trend lines. For simplicity's sake, anything in purple is supported on a higher time frame such as the daily, weekly, or monthly. For example, with this trend line, since I'm on the daily, you'll see that the stock price went up, touched this basically support line just on a trend and kept going up, touched it, kept bouncing up and bouncing up. Now, this has an overall bullish bias. So you would think, hey, this stock has been forming higher highs and higher lows, and it's supposed to be going up. A lot of people did think that way on Friday, but the problem was, even though it's going up, there's this short time bias right here where it's clearly forming a higher low. So what you currently have right now is a conflict in direction. You have an overall bullish bias, but on the short term, you have a bearish bias. So both sides appear to be correct, right? If you told a person, why are you buying the call? It's because it's forming higher highs, higher lows. But then if you told a person who was buying a put play just like me, it's forming lower highs. So there's a directional conflict. So this is the first thing I noticed. When I used to trade a lot, I would just focus on one view of trading instead of trying to see both sides. If we analyze both sides, there was one key factor that needed to happen to prove that the bears were in control of this trade. And here it is. So if I zoom in right now, we are going to go to a lower time frame, such as the 45. So you can clearly see it's been going up, bounce. The sellers were really trying to push it, but then the bulls kept going, and eventually kept going to a point where they hit a brick wall right around here. So we're going to zoom into the 30-minute and probably the 15-minute. So as soon as it hit here, it faced a resistance on this trend line and started to form its own super mini trend line going down this way. So one thing that I like to do after establishing the larger time frames is to also zoom in and see the smaller time frames and color code it in a different color, which in this case is going to be gray. So if we take a look at this, you will see this area is very, very important. And here's why. When the stock hit this area, it performed a false breakout, a huge one. So when it performed that false breakout, that was the first sign that I knew there were lots of sellers in this area. It again tried to go back up, got rejected severely, went back down, went back up, had a lot of resistance, eventually broke out, and then got pushed down. So it kept repeating this cycle until right here, where it finally broke out, retested, and kept going up. So when it came back to this area, the sellers took full control and forced the price to go down. I'm going to delete this. I'll kind of show you what it is a little bit later, but for the example of the video, I'm just going to take it out. So when it formed that huge bearish candle, I knew that the sellers were trying to make a comeback to kind of push the price down. Now this would be considered an example of a breakout. One of the key lessons that I've learned over the years is you're not supposed to go on a breakout. You have to patiently wait for a retest. Now, I unfortunately made a mistake, and you will see it right here. I entered right here before waiting for it to touch this very important supply zone. I did exercise a little bit of FOMO trading, and for that mistake, it cost me 2 hours of pure agony until finally it formed this huge bearish engulfing candle. Because I entered here, stock stayed up, kept going up, and I was just literally praying that, man, I don't want to lose the trade. However, thank goodness it formed a huge bearish engulfing candle, which so happened to be very close to my original entry. So the lesson I learned from there is always be patient, wait for the candle close. After that, when that happened, the stock went all the way down, and you will notice that I plotted it to this area. The reason why I chose this area is it's a swing low, and based just on just gut and having an idea of the market, I felt that with this kind of bearish pressure, it would easily go down by like $2 or $3. So I set my target to right here, and you will notice that I set a risk to reward ratio of 1 to 25. I already know that is not a good risk to reward ratio. Typically, you want it to be 2 or greater. But on that day, I was just trying to make some money, and that's why I decided I might as well just go for it. So it finally did hit that target, and that's how I made my $120. If I had been more patient, and I would have pushed it down. I could have made easily like around $190 in profit. But here is where the support and resistance lines comes into play. Remember in the beginning, I said I usually like to create my support and resistance lines on the daily, weekly, and monthly time frame because it was really pushing towards the end of this major support zone. I didn't want to be in a weird position where it could just spring back up and I would lose all my profits. That's why I set it to this level and I bounced. But overall, that was a big win for me. And my goal right now is to try to recover my account. So I'm just going to be transparent with you guys. This is my account right now. Not a lot of people actually do it. But if I go to all time, this is how much money I have to recover: $6,304.54. That is the amount of money I got to recover. So I'm just trying to figure out better trading strategies. And that's kind of like the inspiration for the series, is just to create a super transparent way of showing, right now I'm currently down, what am I doing to improve? So that way, hopefully, with good trading and good risk management, I can be able to get back up to break even. Because if I get back up to break even, it'll show people like I'm actually a good trader and I actually know what I'm doing. So that's the motivation for the series. So if you enjoyed this video, make sure to like the video, click subscribe. And if you have any questions, feel free to reach out to me. Just DM me or just send me a message in the comments and I'll be able to help you out. Thanks for watching the video. Can't wait to see you on the next one. Peace.